Boy, oh boy, do we have another jam-packed week for the stock market, guys. We're going to break down a lot of companies in this video. We'll go over stocks, charts, you guys know the deal, and we'll go over earnings that are coming up this week, and we'll talk about the CPI data, which is also coming out this week. But before we actually do that, guys, don't forget to hit the like button if you find value and to subscribe. We're almost at 30,000 subs, guys. We're a stone's throw away, and I think we could hit that this week. I appreciate each and every one of you, as always, and if you want some free money from Moomoo, the sponsor of today's video, up to 16 stocks, each up to $2,000. Feel free to use that link down below. Check out all the details. We'll talk more about that later. And excuse my voice, guys. I've lost my voice the past day or two, and I'm working through that. So if I sound a little bit weird, that's what's going on right now. And yeah, with that being said, cheers. I'm gonna need a lot of this water, guys, considering my voice right now. But cheers, and let's dive right into the video. So right now, when I'm actually making this video, it's about 8:30 p.m. on the East Coast, which means the futures market is open, and well, all the futures right now are in the green, it looks like, right? We have the S&P futures up about 0.25%. The let's see, the Dow futures are up, let me see, about 0.1, 0.2. We have the Nasdaq up 0.4, which is good, and the Russell futures are up, let's see, about 0.2%. Not bad. So on Friday, to refresh your memory, guys, we did not have the best day overall in the stock market, right? Friday, we had a red day across the board. SPY went down 0.5%. Triple Q went down, you name it, right? Let me pull it up and see how much Triple Q went down, about 0.5%. You guys can see that. And we had, let's see, the Dow go down about 0.4. The Russell probably down right around that as well. So not the best day overall on Friday. And now that we're seeing a nice pop in the futures, although it doesn't mean for sure we're going to have a green day, it is a good, first indication that maybe the bulls could see a bounce back day tomorrow. Keyword is maybe. Of course, nothing is guaranteed in the stock market, guys, but right now, that's what we're noticing. Futures are moving after we had a pretty rough day on Friday. Not the worst day by any means, but we did sell off on Friday. And now that I'm looking at it, a lot of the sell-off came in the second half of the day. You guys can see right here, right? Triple Q went from around 378 midday to about 371 by close, 372. That was a drop of 1.7%. Pretty big drop, if you ask me, guys, there in the second half of the day. And SPY also went down as well. You guys can see right here, SPY went from around 453 down to about 446. That was a drop of 1.5%, right? Pretty big drop. And, it's bouncing back, like I said, the futures right now. So enough of that. Let's dive into the stocks now that we're looking at, that I'm looking at, that are all reporting earnings this week. And mind you, guys, there's so many companies reporting that we're probably going to do a part 2 video to this. So make sure you all subscribe. And before we actually dive into the ones that we're going to talk about today, let me just read to you all how many companies, or what companies on each day that I'm looking at least, are reporting earnings. So on Monday, which is tomorrow or today if you're watching this, on Monday we have Tyson Foods, that's a big one, Palantir as well, which is a massive one. Check out my most recent video before this one. It was the Palantir one. Go watch it. We also have Lucid, we have Chegg, we have Paramount, right? Beyond Meat. Those are all on Monday, and there's a bunch more, right? But these are the ones that I'm mostly focusing on. Then on Tuesday, we have UPS, Rivian, we have Upstart, we have Eli Lilly, we have Datadog, Novavax, AMC, which we'll probably cover more on Tuesday, so keep in tune for that content, guys. Then on Wednesday, we have Disney, we have Roblox, we have Plug Power, Wynn Resorts, The Trade Desk. Then on Thursday, we have Alibaba, Yeti, Six Flags, and a couple other companies. So it's not a crazy earnings week, I guess, compared to last week and maybe the week before that. But still, a lot of massive companies are reporting. So let's just dive into it. Maybe not so much with the big company to start off the video. Lucid Motors, or Lucid Group, whatever it's called. Lucid Group is not necessarily a massive company, but it is one of those stocks that has a lot of eyeballs. A lot of people are watching it, especially during earnings, which this company set to report earnings on, it looks like here. Let me see, guys. Bear with me. It looks like they're set to report on the 7th, which is, tomorrow. Yeah, tomorrow, Monday, or today, Monday. After the bell, they're set to report these numbers. And mind you, on Friday, this company ended up going down. The stock went down about 4%, so it did see a decline of 27 cents, which was not the best day by any stretch of the imagination for this stock. But again, it's not that bad, at the same time. So they're looking to lose 33 cents per share, it looks like here, versus the loss of, funny enough, 33 cents per share last year. So they're going to do the same EPS as last year, and revenue is going to come up in a major way. 175 million is the expectation versus the 97.3 million from last year. That's up 79% projected year over year. Pretty good. What do you guys think? Let me know in the comments. But to me, guys, 80% rev growth is pretty good. And we can see, again, on Friday, the stock went down 4%, and it is under the moving averages. Keep that in mind on the 4-hour chart. But the second we start to recover over that point, maybe back over, let's say, $7, maybe the mid-7s, that's where we could start to reverse back to the upside. I don't know. What do you guys think? Let me know in the comments. I'm actually going to set my alert now let me put one at 725, and I'll put another one at 750. Let me do that now. Mark is out. We're above 725. So the next company that I'm looking at and paying very, very close attention to, actually more than Lucid, way more than Lucid, is UPS, guys. Let me pull it up and show you what's been going on with this stock, which it's not looking so great heading into earnings. It is down as of Friday barely. 0.3%. That's nothing. But over the past couple of days, really the past week or two, it has gone down about, let's see, $9 to $10, which is a drop of around 5%. So that is a pretty decent drop heading into earnings here. And they're set to report, it looks like, on Tuesday morning. They're looking to do EPS of $2.50. And this company, compared to last year, guys, their numbers are not looking good at all, at least here on EPS, I guess revenue as well. So EPS, they're looking to do $2.50 versus $3.29 from last year. That's not good. Big drop year over year. And when it comes to revenue, they're also dropping year over year. They're looking to do $23.1 billion versus the $24.77 billion from last year. That is down about 7% roughly. That would be down year over year. So at this point, guys, it looks a little, bearish here. I'm not going to lie, based on the chart on UPS. But at the same time, we are arguably, I guess we are holding higher lows, right? You guys see this right here. So honestly, I wouldn't be surprised if we did get some sort of buying pressure. It all comes down to earnings, obviously, guys. And you know how that goes, right? Stocks going to go really any direction after earnings, which is why I don't trade stocks through earnings. I don't like doing that at all. But at this point, I wouldn't be surprised if we did get some sort of bounce in the mid 170s, low 180s, that general range here. I would not be surprised if we did see a pop, in this point. And really, I'm looking to see what direction that UPS ends up picking, right? Is it, does it hold 175, bounce, go to 180, maybe start moving mid 180s even higher? Or does it, fall through the floor under 175, under 170, which would break trend? That'd be a move under the moving averages here. The 180, which is the biggest one that I'm looking at, and that obviously would not be good for the bulls. So that's a quick breakdown here on UPS, guys. And the next one that I'm going to pull up and show you all is Rivian, ticker symbol RIVN, which is actually coming down a good chunk heading into earnings, very similar to UPS that we just covered, right? So Rivian went down 5% on Friday, and it does seem like, at least to me as of now, it is getting rejected at about $28, which you all remember if you've been watching my channel, which if you're not subscribed or if you have not been watching, what are you doing? Make sure to subscribe, hit that like button while you're at it. We've talked about $28. That was the support from back in November of last year, heading into the early days of December, right? We held 28, and obviously we fell right through it. And now we got, we pushed back to 28, got rejected. And to me, guys, this could fill the gap based on the chart back down to $22, maybe down to the 180 SMA, maybe down towards the highs from back in, the end of January, February, right around, $22. That's where it could be going. And if that does happen, guys, that could open up a nice dip buy, in my opinion, on Rivian. Anywhere, honestly, between $22, $23. I'm looking at this very, very closely. So they're looking to do, let me see here, guys. They're actually reporting earnings on Tuesday as well. They're looking to do EPS of negative $1.41, so they're going to lose money versus the loss of $1.62 last year. So they're actually losing less money than last year. Their losses are narrowing, projected. That's the estimates, right? Which that's a really good sign. And on revenue, guys, they're looking to do $983 million versus last year's. Are you ready for this, guys? $364 million. So in other words, percentage-wise, Rivian's looking to grow 170% year over year, which is just unbelievable. So at this point, again, I'm not a big trader through earnings, but if this comes down to 21, 21.50, 22, preferably after earnings, yeah, definitely after earnings, especially with a stock like Rivian, I'd consider it, after earnings, if they're solid, they're doing well with guidance and so forth, lower mid-20s, preferably lower 20s, that would be, a very good spot for Rivian. And the next one here, guys, which has been going ballistic, unbelievable, past couple of weeks for this stock. Well, maybe not Friday, but it's Upstart, UPST. Upstart went down 11% on Friday, but before that, even with the drop on Friday, it is up a ton. It was $11 back in the beginning, it looks like, of May. That was about 3 months ago, and now it's up 400% with the drop from that point, roughly 380% to be exact, which is just unbelievable. So Upstart is set to report earnings on the 8th, which is on Wednesday, right? Or actually, no, that's Tuesday as well. Excuse me, guys. They're looking to lose 7 cents on the quarter versus the profit of 1 cent last year. And listen to this, revenue's looking to come in at $135.29 million versus $228 from last year. You heard that right. Their revenue's actually going to be down roughly 40% year over year, and their stock's been up like this, right? Up this much, which is just insane. It doesn't make sense, right? Well, this is one of those that is highly manipulated, arguably. There's a lot of, short interest. I think the short interest is 30-40% last I checked. So, this move right here, although it's not one straight line, short squeeze, I'm sure a lot of this could be contributed to shorts covering. Who knows? Maybe in anticipation of earnings or something that I'm not even aware of. I don't know. I don't really track Upstart too much. But either way, their earnings are on Tuesday, right? High short interest stock. They're not looking to, very good compared to last year's numbers. So don't expect anything crazy, compared to last year. But the stock chart looks good. And with the sell-off on, Friday, and maybe it comes down even more to the mid-40s, low 50s, this could open up a dip buy in a stock that's clearly, showing a ton of momentum, which is why I'm covering it here in this video. And by the way, guys, please do your own research. Don't buy, don't sell, don't do anything based on these videos. I'm not a financial advisor. Keep that in mind. Just a little disclaimer there, guys. And by the way, if you have not gone up to 16 stocks yet for Moomoo, what are you waiting for? Use that link down below. Once you open up your account and fund it with at least $100, you get 5 stocks right off the bat, and fund your account at least $1,000. You get 10 more stocks, totaling 15 stocks. And by the way, each of those are valued up to $2,000. And listen to this, guys, fund your account at least $5,000 on top of those 15 stocks for a limited time. You also get a free share of either Tesla stock or Expedia stock, which makes this promo a no-brainer. So get on it. Use that link down below. And with that being said, guys, let's continue on here and talk about what companies are reporting earnings on Wednesday. We have 2 that we're going to cover in this video. The first one is Disney, which they're looking to do EPS, and mind you, their numbers year over year are not going to be good. EPS of 88 cents versus $1.09 from last year, so that's down clearly. And they're looking to do revenue of $20.39 billion versus the $21.5 billion from last year, and that's looking to be down roughly 5% year over year. Is that the end of the world? No, but it is down. And mind you, guys, the stock in general, and by down I mean the revenue is going to be down, and this stock in general, its performance has not been good. You guys probably know that. I mean, if we pull up the max chart for Pete's frickin' sake, guys. This stock back in pretty much 2015 was higher than what it is now. We're talking about a frickin' decade ago, guys. Disney was higher. And to me, guys, I don't like making any individual stock too big of a position in my portfolio. You guys know that, or maybe you didn't know that. Now you do know that. I'm one of these investors out there that likes to diversify. I'm not one of these guys that's going all in. And for that reason, I am buying Disney, but I'm not going overboard with it, right? I'm keeping it at not a small, like a minuscule where it wouldn't even matter size position, in the portfolio. But it is roughly, I'd say, if I had to put a percentage on it, maybe 5% of my portfolio, maybe a little bit less, 3 to 5%, something like that. Probably closer to 3% in the overall grand scheme of things, And it's a stock that I like it. I want to buy it. I think long-term this company will do well, although there are some short-term issues right now that we're not going to get into in this video. But I don't want to balloon it, out of, proportion or, buy a bunch of shares where I'm too heavy into it, right? I kind of want to keep it in that 3 to 4% range because I do believe ultimately Disney is going to do very well, and they're doing well now. But overall, their stock, and there's a lot going on with management in the nitty-gritty, right? What's going on under the hood? There's a lot going on, which we're not going to get into in this video. But look, Disney, they're on Wednesday, right? They're after the bell for sure. They're usually after the bell. And I'm not going to lie, this is not the best setup, technically speaking, for the bulls heading into earnings. We have a clear-cut descending triangle. Do you guys see that? I know I see that. That's what we have right here on Disney, so be mindful of that. We also have Wynn Resorts on Wednesday, and their stock went down 1.3% on Friday. And let me see here, guys. Wynn ended up doing, but they're looking to do EPS of 59 cents versus the negative 82 cents from last year. So last year they lost money. Now they're looking to make a profit. That's great. And revenue's looking to come in at $1.54 billion versus the $908 million from last year. And that would be up roughly 70% year over year. Not bad. So Wynn, although technically it's not looking great, the charts, it's been moving sideways. It did go down on Friday. It's one that I'm watching, right? It's one that I'm watching. That's on Wednesday after the bell. And who knows, man, this thing does tend to move a lot during earnings. And on Thursday, guys, the last stock of the video, by the way, I appreciate you all for tuning in, as always, is Alibaba, man. Look at Alibaba, guys. We have a lot going on with this stock in the past couple of weeks, or a lot's been going on. There's more stimulus in China. Their economy's starting to open up. Things are getting back to normal, which is why the stock and other Chinese stocks have slowly been recovering the past couple of months. And now Alibaba is pushing $100 again with earnings coming out on Thursday. I'm excited. They're looking to do EPS of $2.03 versus the $1.62 from last year, and revenue's looking to come in at $31.39 billion. Is this growth I'm seeing? Yes, guys, versus the $28.56 from last year. That would be up roughly 10% year over year. Not bad if you ask me, guys. Not bad. So let's see if this reversal continues on Alibaba. It sure looks like it wants to. And what do you guys think? Let me know your thoughts in the comments. And I almost freaking forgot. Let me pull up Forex Factory and show you all the CPI projections that are coming out this Wednesday. What day is that? It's on the 10th. Maybe Thursday. I forget. Let me see, though. Quickly here, guys. Let me zoom in and show you all what's going on. So I'll put my face a little bit smaller there. Awesome. I'll zoom in right here. So on Thursday, okay, there we go, August 10th, 8:30 a.m., we have CPI in the U.S. That's looking to come in on the monthly number, 0.2% versus last month's 0.2%. I believe that was last month's. Previous was 0.2%. All right, I lost my placing now. Where the heck is it here, guys? And CPI year over year, guess what? Will be going up, projected at least. 3.3% versus 3% from last year. You guys can probably see that right here, right? And when it comes to core CPI, that's looking to be the same, 0.2% versus the 0.2% from last month. So what do you guys think? We have a lot going on this week, and I will make a part 2 to this video talking about some other companies like Eli Lilly, Datadog, other companies that could move, Chegg, Paramount. We'll talk about all those. So make sure you guys subscribe, and don't forget to get those free stocks from Moomoo, up to 16 stocks, each up to $2,000. The details are linked down below. Check it out, guys. Get your money. And with that being said, cheers. I'll see you later.